for a look at European equities. The FTSE 100 in London up by 5% this year. The CAC 40 in Paris up 6% this year. And the DAX in Germany, where there's been some interesting news on public finances, up by 11.5% so far this year. Do you think there's more to go in European stocks?
We do think there's more to go. You know, with some of the challenges emanating from U.S. policy, we've seen a bit of renaissance in some of these non-U.S. areas of the market, particularly in Europe, as an example. And so this might be one of those ramifications that were unintended, where local economies within Europe are starting to spur their own demand through new fiscal policy, as an example, and just through sentiment shift there. And with the sentiment decelerating in the U.S. for buying U.S. equities, those investors go somewhere else. And Europe has been a spot that we've seen. We're not prepared, though, to call this a more secular shift. This is a tactical play in our view. What we mean by that is we think Europe can continue to outperform perhaps over the next 6 to 12 months, but the broader secular story still favors the U.S. market, where we have better growth potential longer term.
What's your take on the German story, where a relaxation of borrowing rules, to put it simply, has given a boost to the defense sector? Not the defensives, but the actual armaments makers and companies related to weapons manufacturing have done well, and the broader German market.
Yeah, with this influx of potential new fiscal dollars, and we're starting to see governments more willing to take on additional debt and spend that on things like defense, it is benefiting those local players a lot. And so particularly the names and the companies that are more domestically oriented in Europe, we think there's some sizable benefits to this additional spending that we're going to see through fiscal policy, not within Germany, but even more broadly across the Nordics, as an example.
Why are investors not concerned about the effects of trade tariffs on the European economy and, by extension, European stocks?
I think they are, just to be clear. And we're not saying that it's a panacea, just buy European stocks, you're going to be positive. There is going to be volatility in the European equity markets, just as we're seeing in the U.S. markets. But I think the net offsetting of some of these new policies and new fiscal drivers is enough of a sentiment shift to have investors want to at least move many of their broadly underweight positions, as they have been for much of the last decade, to more of a neutral stance or even an overweight. And that was one of the things that we did as a team. We moved to a neutral rate on equities in January, and happy we did. I wish we would have gone overweight, but at minimum, we're no longer underweight like much of the market has been for the last decade.
At Manulife, how do you achieve European exposure, European equity exposure for your clients? Do you buy European stocks, or do you purchase index products?
It's a little bit of both, depending on the product type that we're buying it for, but we rely on the more passive, systematic ways of getting exposure if it's more tactical, but we do rely on also active management to find good ideas that are more sector, industry, or individual stock specific.
Okay, none of this means that you don't see opportunity in U.S. stocks, but I get the feeling you're a bit more selective in the U.S. than you've been in the past.
Definitely more selective, and definitely not relying on what the winners have been for the last decade. And this is where I think some broadening of breadth in the U.S. market has been actually a great thing for investors. You no longer have to just own the big 7 names. You can actually find decent value and opportunity in names that haven't driven the market for the last decade. And that's why we like financials as an example, part of the healthcare sector. Even some of the stodgier industries in the staples markets, utilities, et cetera, there is actually some decent return potential in those areas.
Which areas of healthcare do you like?
So when we look at healthcare, there's always this policy backdrop that's potentially negative. But when we look at some of the actual pharma names that are driving decent dividends, as well as have consistent earnings, the big pharma names we do think have the best ballast, particularly for downside protection.
That's Nate Thooft, and those are his views on European stocks.